Marvin the Martian here. Give me back my ray gun before I dynamize you.
Wait a minute. No, Top Gun here, and I got a good one for you, folks. Thanks for tuning in. Apparently, you guys, what do you want the content on? We don't care. We just want content. Aw, alright, as you wish. I'm gonna try something new and start my show with a new segment. It's called Yo, Alexa! Play Caravan Palace, Wonderland. How many people's Alexas did I just trigger? And are you letting it go? Are you laughing right now and starting to imagine? And and start to boom, boom, get the dance going. Like I wish I could play music on my show, but I can't. So I can always start the show off and trigger people's Alexa devices for them. I miss being a DJ. Can you tell? So yeah. If you want to participate, just have your YouTube on really loud next to your Alexa, and I will shout it out at the beginning of the show. My new segment, Yo Alexa. I think that's gonna be good. Probably nobody cares, and they'll just get past it. But I had fun. I hope I triggered at least one person's, just one, and I will feel vindicated. I maybe used to do this on Zoom meetings during the pandemic. I crack myself up. So, yeah, I've decided really that in this insane world, really with everything going on, that, I'm just going to lose my mind, lose my marbles. It's really convenient. Somebody got me a little box of them. I'll show them in the next episode. I don't have ready for here, but yeah. I'm gonna take them and I'm gonna lose them. Just gonna lose them. Going mad seems like the only sane choice in an insane world. So, really, I try to look at history as little points, like the Cuban Missile Crisis. Everyone got through that. There was a Cold War for like 40 years. Threats and threats and threats and bolstering. But really, I mean mad. Mutually assured destruction. So, we're even gonna get a mascot here for my channel for when things get really crazy, and that Bert the Turtle. Bert the Turtle. That's gonna be our mascot here. So I'm definitely going to have to. There we go, Bert and Turtle. I'm even gonna save this image right here. All right. Yep. Gonna save this. Duck and cover. He's gonna be a mascot for the show going forward. I don't know how clearly you can even see him right there because it puts my tile right underneath this tile. Yeah, but yeah, duck and cover. There are a select member of the audience that know exactly what I'm saying when I say Bert the Turtle, our new mascot. So, what does Bert the Turtle say? Duck and cover. What's that, Bert? Duck and cover. Oh, wow. Bert's all right. He's going to actually yell that stuff out for us. Thanks, Bert. Duck and cover. Okay, Bert, we got the point. Wait, is Top Gun actually doing ventriloquism, or did he pre-record that? Is this the worst show ever? I try, guys. I try. Duck and cover. Bert, time to go away. We're gonna get rid of Bert for now. So why is Bert a mascot for our show? Nord Stream 1. That should be enough. Yep, right here. I can go on Twitter and play some segments. I'm not sure if I want to get my YouTube channel banned. I follow and retweet some things, so you can go there. But yeah, Nord Stream 1. Not an earthquake. So yeah, everyone right now is throwing the blame game around. Well, who gone done it? Bloomberg was loud this morning with misinformation. I went on a Twitter space there, and it's like, oh yeah, point the finger there. That totally makes sense. Yeah, let's just kneecap ourselves with a crowbar. That'll make sense. No, I don't think it was them. I think it's the people that made notifications and maybe bragged about it in February about doing test drills and practice runs, basically, and yada, yada, yada. So Nord Stream 1, the oil pipeline from Russia to Europe, natural gas supply, leaking up in a giant plume. Looking cooler. Bert, you're not even on screen. So yeah, well, it's time to, this stuff's not funny. Well, I can't stop laughing. I think I've developed an actual nervous laugh. So if I'm going to sound like a clown, I might as well crack jokes while we're up here, because, yeah, all right, marbles, casting them aside. All right, so yeah, no, nothing to see here, folks. I love that Leslie Nielsen from Naked Gun thing. Nothing to see here, folks. Yeah. Duck and color. Okay, Bert. All right, maybe we should get this back off the screen. Bert's too excited right now. So with all this going on too, of course, hexologist, still trying to get his attention. Hey, buddy, I love your humor. Now that I'm definitely paying attention, like, whoa, wait, all right, yeah, I definitely get what he says. Also, I've decided to start taking stock tips from his pet Schmida. He keeps letting that thing loose. I don't think he's got very good control of it. We shall save him up to get him a walking leash for that pet Schmida, because it's getting out and it's wreaking havoc. Apple. Now, strangely, as I'm watching the market, like, okay, the Nasdaq and the SPX didn't crash with Apple. What is going on? Are people hedging against that? Like, everyone's like screaming so much turmoil about what this final leg is going to look like going down in the market. Oh, it's going to look like this. Oh, it's going to look like this. Well, guys, you're all right and you're all wrong. And you're going to love me for a moment here, but the observer principle, spooky action at a distance. Okay, the basic premise of all of our reality is all possibilities are true until observed. And observation in this case comes through relational place and time. So as we progress into the future, we will observe the events unfold. But until then, all possibilities are true. And the thing is, there are choices going forward. And there is not a set of dominoes. Like, there are dominoes, but they have different leverage points, different snapping points, and those are changing. Like, the whole world is dynamic. So anyone who says they know 100% what's going to happen is full of crap. I make my best estimates that, the trend is not done here. But when I go over and look at the NASDAQ, the NASDAQ double bottomed. So it's trying to... Okay, all right. So there's this weird disagreement where these are normally dragged around by the ETFs, but Apple is falling alone. So a lot of thesis is about the direct dragging. I'm glad I didn't hop right on it, because I've been waiting to see what happens when the last legs start falling. So Apple still has more crash to happen. But interestingly enough, the currency wars have begun. So between Britain, the rest of the EU, Japan, basically all these countries suffering inflation. As the US dollar goes up, their inflation problems get worse. So they have to work harder to fix theirs. But as they fix theirs and bolster their currency, well, wouldn't you know, commodities, like what's happening right here, do well. And when commodities are doing well, inflation spikes back up and the US dollar goes down. So the US dollar is dependent on the other currencies doing poorly right now. They're all basically trying to shift the pain around between each other, dumping stocks and bonds, treasury bonds, blah, 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 government bonds, all around the place, doing their bolstering effects that I'm not going to bore you into, because, oh my god, your brains will just leak out your ears. They try to make it as boring as possible. The math, I get it. I really get it. So I try to keep a bunch of baselines, but this is where, how could I, be excited or hopeful at all? This is the final big legs when Tesla and Apple come down for their major corrections. We're going to see most of the repositioning in the stock market, most of the major pain. Now, does that mean that stocks are going to instantly recover? No. It just means that the max pain will be over. There may even still be a downtrend because we can look this up on the Wall Street psychology graph. Haven't done this in ages. Street. Oh, look, so many convenient images. Let's make one of these big. Let's go to the site. All right, there. Now I'm not totally covering it. So, basic market psychology. And we're going through a mega cycle. So, obviously, you guys can tell yellow is the case, but not everything is in yellow. That's where I'm like, well, Netflix had its yellow. Netflix is over here in what we call the anger stage, before the depression stage. So it's already shaken out most of its major pain. It might see a little leg down, but Apple is in the denial stage still. So the market has separated all these stages. Not all of it travels at the same time all at once, which is where, some people are like, oh, I'll get bullish. Oh, all the sentiment of bears switch around, which is partially true. But that doesn't mean now. It doesn't mean now. Like I'm getting, and now, hope you're watching this. Wait, when is this in the movie? It's now. What do you mean now? When's now? Now's now. Spaceballs. Anyways, denial. We've got denial, panic, and this is where Apple is in this stage where we're going to see this final leg. These are the last big chips to follow it, but there's still more pain. So as they fall, the others are going to be hitting this stage and this stage, which means not right out of it. Still more sideways action. But what it would be this area in the stock market that turns around and leads right back into this area. So the red here going into the disbeliefs. So this whole area in here is what we call DCA perfection. You don't have to time anything in here anymore other than DCAing. If you can tell that max pain is out of the way and you're in the anger or depression stage, that is the perfect slow accumulation phase. I mean, everyone wants to time it right here and know they're here, but when you're sure that the panic's out of the way, like the stocks will have more variation that's on here, and crypto is still so volatile. But basically, the key is that everyone is trying to buy during the depression phase. Oh, yeah, that is the perfect time. But you can miss the depression phase thinking it hasn't happened yet. Things can turn around faster. Now, stocks are not going to do great if the Feds and central banks have to pivot because of the strange crap that basically the market's breaking into. There's so many ways this could still play out depending on how they decide to act and at what time. So, but am I aping into anything? No, not at all. Basically, if we're going to use metaphors to make it nice and simple, we're out at the swimming pool and I'm saying, hey, I know there's snow on the ground, but spring's around the corner. And you're like, yeah, right. Well, I'm saying just put your toe in. I'm not saying put the feet in or the legs in. Like, oh, yeah. But I'm not saying that either because I'm not a financial advisor. It's just certain assets I may have started in the last few weeks doing my DCA because I'm okay with a little bit more pain. It's my risk tolerance. Also, to state what I'm doing, not necessarily what you should do because I could be an idiot. What I'm doing is spending like, $25 a week at this point. That's what I'm squirreling away. $50 if I can even swing it. That's my risk tolerance. $100 to $200 a month right now. That's me sticking my toe in, getting into some assets that I think are definitely past the panic stage. And at that point, can I take some more pain in the anger stage to make sure I don't miss the depression disbelief stage? Yeah, because as I'm buying in here, I'll see better and better price points. This is where I play Warren Buffett. I don't necessarily have to time everything with day trading, but in a macro cycle, I'm happy timing a little bit to try and scoop up when I think good deals are in. So that's how I'm trying to keep my sanity in this and keep some sort of hope because, well, really, I don't believe everything's going to fall right apart. We're not at that point. The dollar's not that crippled. I mean, the yen inflated to a point in the 90s, and probably again, we're like 10,000 yen which is supposed to be the equivalent of $1 or something, is what it costs for a cup of coffee. The entire society and government didn't collapse. I mean, they've had to do a reset when it got that insane. But I mean, Starbucks is only still at $20 a cup. I mean, we haven't seen $200 Timmy's and Starbucks yet. We haven't seen it for $1,000. I mean, inflation can go a long way in a currency, folks. Like, as long as they want to keep printing and keep up ramping it up, all right, just roll into inflation. Like, eventually it gets into a place of insanity where no one can do the math in order to just buy a book or spend a month's rent. So, yeah, it falls apart then. But hey, $1 million a month. Oh, that's math people can still do. So, could that end up a price in the world of inflation? Yeah, it seems absolutely insane. But Dan Aykroyd, at one point back in the 80s, yeah, well, we'll just all be millionaires. Well, how many people actually are making 200 grand a year and can't get by? Like, they make $1 million every 5 years. They probably have 401ks that before this crash were worth $1 million. I had some friends like that, even though I'm dirt poor. Um, like, wow, yeah, people were millionaires literally to get by. And I mean, the cars weren't 400,000, but 40,000, or certain Rolls Royces 200,000. Like, geez, Dan Aykroyd wasn't far off about this push, and well, how long until we're all billionaires? I mean, they can be trillionaires and quadrillionaires. There's still some names to go ahead of these zeros for a while. Imagine, wouldn't it be great? We'll all be billionaires. Cars will cost $10 million. Houses will cost $100 million. It'll be wonderful, folks. Inflation. And now, at some point in the future, if my channel doesn't get banned, that clip might be played in 40 years. I wonder. Oh, I hope not. And the reality of the possibility of it is setting in. So this is where, yeah, some crazy stuff is going to come in the decades. Inflationary currencies last, I think, 150 years. And this is 80 years in. But I mean, to some millennials that will think they're going to live 100 years, that's their lifetime. And depending on the rate of inflation, that can spin it out before 150 years if it goes too insane too quickly. So the things that can actually happen, people aren't realizing, yeah, I mean, crazy can double down. Just when you think you made things idiot-proof or they can't get any stranger, the world makes a better idiot. And God laughs in the face of men who make plans. That's why that's why I don't even come to my shows with a plan. I don't write scripts. I'm just like, you know what? Let's start. I'm going to talk about what's going on and what I've been thinking about. How crazy is this old world we're all spinning on, this little ball of strange choice? Yeah. My, me, oh my. Even in all of this insanity, by at least having a vague idea of what in the grand term is possible and what in the short term is possible, yeah, statistical probability starts to become a thing, and you can start to think in terms and make your best bets. Like I mentioned, there are certain assets I'm bullish on. Well, how can you be bullish in assets in a market like this? Well, here's the 3 tech stocks I look at. Now, Tesla is becoming the last one, the last leg to fall, because oh yay, they still are loving mania. Argument's still going, like they just disbelief. Oh my. Yeah. So Apple taking a leg down, but Netflix. Look at how well Netflix did today. Now, I know you're in crypto, you're like, why do I care? Well, just imagine these, instead of percents, are X's. Like, they look at these little base points, man. We look at percent. So they look at these percent points like X's. So just think in crypto terms. 7 X's for Netflix. 50%. Not basis, not 0.5%. 59. That's how important these things are to them. But Netflix, let's get out on the macro a little bit here. Let's show you. in case you're not aware, where Netflix came from. Oh, Dolly, did it have some drops from 700. But now it's like, yeah, market crash, we're cool. Come hang out here. It's safe. We had our max pain. Are there going to be insane gains? That's insane for the stock market. That's doing really good while Apple's crashing. Like, people are hedging over, but ETFs, there's still a lot of connection. When the final legs drop, there's still going to be a yank, but it's a safer yank than being in what are traditionally the safer areas. This is where wealth moves around. Bets get hedged because this stuff takes time. If it had all snapped at once, yeah, there would have been a massive domino. What everybody expects and is screaming in the major doom of the great collapse and the great reset would have happened if this happened too quickly. But Wall Street cashed out at the top in December and has been removing assets around and rebolstering and yada yada yada. So I mean, as pain and collapse happens early in some things, it's a kind of a shell game moving around the assets and rebolstering. So Netflix from this point won't move. But if we want to go years into the future, what bull trend might you expect? Now I'm going into 25, 26 or whatever for a 2x years. And there will be below the line action, above the line action. That is not a direct trend line. I'm not predicting the future, but I am using a trend and we can mark the top line. Like, well, I could look around for some long-term trends. Nothing that'll be a solid guide, but something to kind of indicate a medium. I could, because basically, ideally, Netflix as a company, as long as it manages to keep some subscribers and offer cheap services when cable and other stuff aren't an option, it'll stay in business. And it makes it a good place with revenue to steadily ride out year over year, like 10-20% gains, maybe. Or maybe even lower. Maybe just that. The stock market would still consider that a safe haven. Generally, if all the pain is maxed out, even if we're going to dip under, if that's going to be the long-term trend, not looking for instant trades. And that's where I'm very, very keen on long trends. What will they be? How will the median of this look as it starts to try and come back? So Netflix, I'm not saying go dive in. There's still more pain to be had, but there's a lot less pain than there is coming to Tesla and Apple. So move time and this stuff. There's still going to be assets outside of that that are doing very, very well. Like right now, commodities, like today, again, surging with other currencies. It's just, what a game, what a mess. There will be pain. Oh, yes, there will be pain. Market makers squeezing people out, playing whale games. There are whales that built this market that are not completely unprepared to capitalize on this. It's not the end of times. You don't need a machete under your bed and a go bag. I mean, if you want one, I have one. I'm just saying you don't need one. Yeah, do as I say, not as I do. Anyway, it is what it is. Like, really, if all hell really did break loose, duck and cover. Okay, Bert, we'll bring you back up for a moment. Where are you, Bert? Oh, we got rid of you, Bert. Oh, then how are you even doing that? Duck and cover. I guess Bert's stuck on the show. But, I mean, really, everyone wants to panic, and a bomb shelter doesn't even make sense in this. I mean, if it were to happen, really happen, it'd be over in an instant. Grant me the serenity to accept the things I cannot change, the courage to change the things I can, and the wisdom to know the difference. And there are two things that a person should never be mad at in life: the things that they cannot control, and the things that they can. So rather than getting mad about something you can do something about, go do it. And why waste your time losing blood pressure about things you can't control? And really, if a nuke falls, dead in an instant. Literally. Or maybe you're outside the shockwave and you've got just a couple minutes to panic before gone. Um, like, really, you just gotta keep going with life. Or at least I feel like I have to. I mean, really, that kind of thing I can't do anything about. And if it doesn't happen, I'm going to need certain things. And if it does, there's no way for me to prepare for it. So there's no reason I should change my day to day behavior based on that news. Now, that news affecting stock markets and panic, okay, maybe I change my investing based on that, but I still go to work. No point in actually panicking about the things outside of my control. I should just do my best to prepare my hedges for the best case scenario. The best case scenario. What's that? Minimal fighting. A war that goes on for maybe another few months and Russia gives up. A little more tension and a pop between something else that goes maybe another year. Not too long. A year or two and the tensions have died off. Inflation's under control. The central banks are have gotten price stability. We're still probably in stagflation, and everyone has readjusted to new price levels and new salaries. But again, the economic boom phase starts to go with the money printer. It's the best case scenario, and it could happen. Do I want to be prepared in case? Yes, I do. Worst case scenario? Okay, yeah, duck and cover. So, Bert. Anyway, so worst case scenario, yeah, okay, but there are a lot of scenarios in between. So, I mean, right now we've got the currency wars. Who's playing chicken where and who's going to pivot first? That could play out a bunch of different ways. What effects will they have as they play out? Well, I'm not entirely sure, but I watch a few experts that have a pretty good idea, so I'm learning. And it is chaos. Like I knew basically I can see the possibilities spin off and branch off. I think kind of four dimensionally. This is why it's hard for me to explain sometimes, and I have to just, yeah, all right, let's try and put this in math terms, something I can paint out. Where I'm like, oh, boo, a scatter. Like I've known the chaos is coming, the pain will happen, and a big shift will happen. This is true. What it will look like, though, oh, there are several different ways it could look. Which one is the most likely? I have no idea. And I would be lying if I said I did. And even though the images I can see are distorted because there's still a bunch of different possibilities I can't even define on some of them, let alone predict. So, big gaping holes in this four dimensional thought path. Like imagining a tree of possibilities expanding. So, it's hard for me to explain other than what I'm watching, what I look for. So the easiest ways for me to keep pulse on what's going on is, again, copper. This shows the economic activity. Basically, how strong is the economy? How much building, how much copper is being utilized? It's usually a pretty good baseline for how your economy is doing. So the U.S. economy and world economy, copper is not really in enough of a high demand. The economies are not doing well. Oil is even actually still taking quite the beating. I expected oil and natural gas to make, well, natural gas is still, it's taking a beating, but we're going to see with the currency wars, this might really unstabilize things because who knows if Europe will even be able to really buy oil. And if they can't, where's the money in the futures in the natural gas for their heating? I don't know. It is crazy, though. Crazy, crazy. Like oil is making one heck of a rebound today. Natural gas might not be because of Nord Stream. Can't sell it if you're losing it up through the ocean. So, yeah, I watch natural gas, I watch oil, I watch copper. Gold is the old man in the room, the currency from all times. It's been around forever, that's heavily manipulated by JP Morgan with futures, which aren't IOUs for gold. They're not even connected to gold. There's like 250 times the futures that there is gold, or a better way to think of it is for all the futures that are sold and all the market activity that happens in gold, only 0.4% of it is actually in the physical gold. The rest of it is all in these futures. It's what oversupplies to the demand. So gold is heavily manipulated, but as long as the dollar's going up, it won't go down. So even if the dollar's going down today, gold's kind of buying it a little bit. Like that's where gold has been a good indicator on whether when these corrections in the dollar have happened and it's been like, nope, I'm not moving because it's BS. It's about to rebound. Oh, okay. Old man in the room is calling what the dollar's doing, which is responding to the Fed. Okay. And that usually is counter to these, but not always. Like, depending on what's going on in the market and who, all of a sudden, because I'm looking at American market models. So, I mean, I scroll up here and I do have the Australian, I think, index here, which, yeah, the Australian, which is taking a beating finally, because I was pretty impressed that watching for the year that, like, going into 22 when everything was crawling down, Australia was doing all right for a while in denial here. Like, up until this point in the drop, I was wondering, I'm like, how solid is Australia's economy and how detached is it? Oh, okay. All right. I was optimistic, but I'm less so now. So, am I even as worried about tracking Australia? Not anymore. Goodbye. So, the SPX I hadn't been paying attention to because Apple had been leading it so hardcore, but now the SPX looks like it's in the lead, yanking down, and the NASDAQ as well, cracking their double bottoms. While Apple over here, wow, there was the bottom. It's still in that kind of denial. It just will not come back down. It basically, if the NASDAQ and the SPX did it, Apple's going to have to retest the June bottom, but will that hold? That's the question. That really is the main question, is will it hold? Because the macro trend I had, basically, like, this is such an insanely wide variance. Like, how is this really useful for a range? Like, right now it's been staying in here. Does it have this much upside potential in it right now? I don't really have a macro downtrend that I feel more confident about, but this is the macro bull trend where, wow, I mean, I could not believe the mania getting all the way to it. So somewhere around here to down here, could we see another one up to it? Wow. That would tell me denial might still be intact in the market. Depends on how long it takes, but we've got some nasty pictures. Tim Cook came out for Apple and announced the news that they're not scaling up production because demand's dropping. Go figure. Demand in copper's dropping because you don't need copper if you're not building extra iPhones. Funny how this economy stuff starts to play out, work out, isn't it, folks? So, no, I am not a financial advisor. Yeah, I make stock calls for fun, but I'm trying to teach you how to critically think like I'm trying to learn how to critically think because I'm a noob. Noob. Just started learning how to do this stuff. Yes, I might be a little bit of an idiot savant. Okay, so I might have an advantage, but there's still so much I don't know. Like today, I was listening to Prophet Blue on Twitter because I like his tweets. He's very good with his technical analysis. It made me think, oh, great, I don't have to get better at my game. I'm like, yes, I agree with your TA. It looks flawless. Then he called today, like, hey, better close your shorts. I'm like, what? Why? Apple's going to crash. And my thesis, Apple takes SPX and NASDAQ, and those take Bitcoin. But Apple's going inverse of them. Like, has there been some severing from the ETF, some weight redistribution that I wasn't aware of in the financial market? All this complicated whale game that stuff happens. I don't know. But, oh yeah, we might need to zoom in on this. So, yeah. He's yelling out this morning, close your shorts. And I'm like, well, why? Apple pain is coming. That should be a huge risk off to everyone in it. And then, oh, you're right. You are right. Way to go, Prophet Blue. I'm glad I did not contradict you. I know enough to respect you and your TA, and it did look solid, but I was starting to get very big on my correlation thesis, but it has been cracking and snapping between some things. And that's what tells me capitulation's coming, because the stock market's starting to trade with a little bit of weird confidence, and there should be a huge giant leg down. And another scream and correlation between it, a lot of things going the same direction. But the ROIs, some things will go down 90%, while some things lose 10%. And that will be the signal going forward what's safer to invest in. But most of the sentiment will be so crushed by this leg down that no one will want to invest. So no more moon gains. Not even in crypto, but I mean, I still expect crypto to be more volatile than the stock market. So yes, still, I mean, whatever you want to call it, larger gains, but crypto is a high speculative asset. So, I mean, there is inherent value, but not the same way that people are used to pricing. So, how valued will that be during a recession is the big question on how much activity will stay there. How big will possible gains and rallies be? And anyone that's hugely optimistic right now is full of crap. But anyone who's also full of gloom and doom 100% is full of crap. And that's why I'm optimistic, because the world does keep turning. Yes, it's going to be bad. And I mean, how do you scale that? How do you weigh that? Well, I'm talking possibly numbers of unemployment as high as 8, 9, 10% if things get really nasty. But that's not unemployment of 100%. That's not a full government collapse. Put 10% of the population unemployed in the US and possibly Canada. That's some nasty levels. Really nasty levels. That causes a lot of problems and a change of quality of life. Things that people aren't generally comfortable with. That's where I laugh a little bit because it's not funny, but it is because I've been poor my whole life. Grew up poor, and I've lived poor. And there's a certain freeingness to it at a certain point about just accepting a lifestyle where money doesn't have to be the most important thing. Like, I need it to live, but I don't bother stressing about squirreling it away. When I have had a bunch, it was just easier to be generous and spread it around because I knew it wouldn't last. And that I'd always be back to the daily grind, the struggle to make another dollar. And right now, I have more hope than I ever have because I never had hope in investing in traditional markets because of crap like this that's going on. And realistically, for all the amount of money that I'd put away, I wasn't sure it would actually really cut against inflation. Like, all right, the dollar has lost so much in 90 years ish that $20 bill basically has the spending power that a dollar used to. Like, wow, 95% has been lost in the spending power since the 30s or 40s or whatever, or 20s. I lose track of all the facts that I'm learning. So I don't have them all perfectly memorized just watching that kind of drain to the currency. Ouch. I was well aware of it before, and I'm like, well, I grew up poor. I don't have a lot of money to start. I can barely, live in paycheck to paycheck, and I could put a little bit of money away and live completely miserable, and chance that maybe my pension doesn't get stolen, they don't get bankrupt, and a whole bunch of shady things don't happen, yada 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 yada. Oh, and I don't even own my shares or bonds. I get a receipt, an IOU from a broker who says, well, I'm selling you these bonds, and he doesn't even own the bonds. He gets an IOU receipt from another like lender or warehouse, and sometimes they don't even have the bonds, and they're in a completely centralized facility. So sometimes they misreport the amount of bonds and shares that they have, so they can sell more than they actually have. Again, affecting supply and demand. And when people come crashing in for their shares, oh, they don't have enough to actually refund them because there wasn't actually that many shares. Oh, that kind of corruption that's all throughout Wall Street. Yeah, I want to give my money to them. No. So I rather live in the moment. It wasn't the best lifestyle though. It was barely manageable. And I tried to look for the smell of the roses immediate value. And I mean, I still do try to appreciate the little things, but no longer am I going to chase them. They'll come as they come. And I'm all right with the daily grind because I do have hope in the future and investing in my own banking, being my own bank with my own wallet in these financial instruments that I have come to understand. And through these, yeah, I have hope that I am in on some early technology that has actual use cases and will see even more institutional money flowing into as they're able to use this technology. Okay. And being here first before them means their money comes in before the games start, which means I would be prepared and okay to retire one day, maybe even sooner than I think. Hopefully, a lot sooner. And I can just keep going to work and not be irresponsible, not be out partying, and take those little $25 or $50 I thought would have no impact and actually start putting them somewhere. That's the kind of belief and faith I've had. And yeah, I FOMO'd in a little bit near the top because I didn't want to miss stuff. And I FOMO'd, luckily, into a sacrifice that held a lot of my value, several sacrifices. And I've heard some interesting, I've heard some interesting thoughts as of late. And really, I mean, shiny coin syndrome. I'm going to go and I want to get in this because this token has whatever, so it promises gains. Well, yet the whatever is really pretty important. What is the gain aspect? And some are like not promising gains, but it's like, wait, what are you doing? And okay, so there are protocols that offer services. Like, what's the utility? Because Bitcoin gave us the trustless system. So now every crypto is trustless. So Bitcoin, well, great. Whatever you do, other crypto can do and more and better. Time to step it up, Bitcoin, or you're gonna lose. Now, since all cryptocurrency does that, that can't be your big thing to get people to use yours. Okay. So gains, that makes people want to buy it. But okay, Safe Moon, tax tokens. You're just playing a shuffle game. That's not actually gains. People want to have utility. So now, easy use wallet with built in swapping. That's utility. People might pay to use that. That means fees and revenue. That revenue can be put into this financial system. That that's cool. If you've been watching my show, you know which protocol that is. Then, an actual bridge and devs platform like node services, all for sorts of infrastructure, like a construction company for a brand new financial ecosystem, a new marketplace. Would people pay to use services from that? I think so. Okay, that's revenue based. That's a service for this financial market. That can go back into price. That's gains. Okay. Loan protocols, so you don't have to sell the assets you like. Yeah, that sounds like something people might use. There's revenue. Margin trading, because people are degenerates. Yes, that'll happen. There's revenue. A casino, because people will actually place bets with their crypto because it's not risky enough. Yeah, that'll make a little bit of revenue. These are all protocols I've bought into. NFTs, I hate those, but people will keep trading them. And I own two now. What's up? What's up? But they're not rock JPEGs. So I own NFT marketplaces, auction houses, like limit order booking. Like there is a whole bunch of utilities coming to Pulse Chain that people are going to want to use as financial instruments or to conduct their business. And even I'll give a shout out to M87 Black Hole for their fork. I'm not sure. I have to do more investigating because I'm not sure. They have some policies that I'm not sure I'm completely on board with that seem counterintuitive. But at least some people are going to want to use that fee-based service. That's revenue. That's why market makers make the market, because they can make fees off the liquidity pools. That's revenue. Dexes make revenue. The market makers make revenue. So Okay, I immediately got psyched about getting invested in a bunch of those and locked in my value in sacrifices, so it didn't matter about the market crash. Hoorah, probably the best decision I ever made. Still waiting to see and buy my gold Zamboni and drive it around the ice to prove to everyone, yeah, I'm a genius. Just in case my math models didn't do it for you. So really, yeah, I have a lot of optimism about the future, but that's going to take years. I have no illusions about it being quick, which means I do need an interim plan, jobs in the meantime, maybe other small areas where I can game some timing and go now, right now is a good trend because everyone talks about day trading. So I'm looking at micro versus macro. Again, if we go back to Apple as an example here, everyone is zoomed in on the hour chart and they're trying to go day by day by day, predicting it. Now, as a macro, I'm looking more at the 4 hour or the daily, generally. Now, looking at the daily, I'm waiting weeks between when I'm smart. Here, I was just like fed up with all this mania. Like, come on, BS. Called it with a stop loss at 180, and hoorah, within a week, right. Then, when she came back around, because she kissed right off this, I'm like, she's making the same trend, copy and paste the line, sure enough. And when she came up here, I'm like, there, it's given. This is the best and optimal day to do it within weeks and months, right here, waiting to stock for that one opportunity to short there. Except I didn't short, I called it out. That's when I waited for put my reputation on it. And then they came crashing down. And basically, in this little crash down, I'd have to get back into the hourly. There's gamma squeezes. So I even was really kind and called out a close right here for those two shorts. So if you did that, massive, massive gains. But then I got emotional. This yellow line going, these yellow sideways lines are where I call BS. I got emotional and thought the gamma squeeze would end and we'd start going down below this trend. I should have had faith in my trending because I called out a short here, and then as it was going up, I realized this should be a stop loss, but didn't have a chance to call it out. And figured, no one's listening to my calls anyway. Kind of felt a little embarrassed, like I'm wrong. But maybe I should have called that out. But when we got back up here, I'm like, all right, right here, this is so close to this top side again. I called that out again, and I did call a stop loss, I think, at 160 or 161. Like, yeah, it could come up and slam against this, but that's where it should come right back down. And I called BS. It scared a little above 3 times, but it's come back down. All right, and I've watched this chaos going, and then I have been commenting like it's stopping. Like, I hope some people listened and grabbed this. I don't know. I'm not a financial advisor, though. Like, I hope you saw what I saw. And then this is where, all right, she snapped right back down. Some people have jumped on that, bouncing up. I don't know what's coming in the future here. Like, this, I knew A, B, C, D, like, whack, whack, whack. But there's only so many times this will happen. The trend is your friend until the end. But where is the end of the trend? So at this point, I'm going to get rid of this stop loss to clean things up. Also, I'm just going to take this one and we'll delete it, but I'll repaste it. So we'll call it menumpty level. I'll make it a little red line here where I made bad call. Because, yep, definitely not perfect. That's why you can't just go on my actions. Plus, I'm not always going to shout out if there's an open or a close that I see. The tea leaves might not tell me. So right now, if you're holding that one, hoorah. You've enjoyed it, but is now a time to hop on? No, because there's too much potential as far as I see for an upside. Now, if it mania trades back up to test these levels, I think that's near the top side of this again. That might be another present where it comes up so quickly to this level when there is so clearly a lot of economic pain, a lot of facts to unfurl for Apple. hmm That's how I'm basing these on a macro. Is like day to day. I don't know. I don't know from here. Could go down, could go up, go down. But if it gets up here, then I know to call BS and add, maybe double down. Finally, figure out how to open a put and do some calculations. But really, in order to make money off these, to understand. So if I want to open an actual short, as far as I understand, I have to leverage something. So, and leverage is never a good call. I have to put some asset to where my money is, or mouth where my money is. But regardless of that, let's say $1,000. Do I have $1,000? No. But let's say I put in $1,000, and then I have to cover the fees, the spread. All right. But let's say Apple loses 5% because I'm right. That's $50 basically a profit because I still have to that price spend $950 to buy that stock back. Oh, and I have to cover spreads and this and that. So okay, so if I know Apple's going to lose 10% in the market, $1,000, that's 100, but then minus all the fees and everything else. So to make a gain off of the short, I have to already be very wealthy. And that's what ticks me off about the short game from the way I perceive it. If anyone knows about this or how I could benefit off of my TA, please hit me up in my comments. And here comes the scams. Everyone else, ignore those. Oh my god. Yeah, right. Like I trust half those. Anyway, make money, da 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 da. No, somebody's like, oh, this app, you may want to do your research. Here, no links in my chats. Like anyone who gets links, automatically, don't care what you're sending a link to. You're just, because 99% of the time it's all scams. So those are the ones I remove. So don't ever drop links in my comments unless you want to be removed and reported. But you can always talk information. I will tolerate that, even when it leads to some shady sites once in a while until I'm like, oh no, that's way too shady for my liking. So I think I've rambled and ranted for a long enough time about how I am looking at the market conditions, how I'm trying to establish trends. I've gone over and shown you guys a little bit before how I build and connect points, and look for my macro trends and then look at fundamentals to reinforce how likely the current TA trend is. So I am trying to look at the market, what kind of pain is going on, what's going on in the world economy, and then, people go and blow up Nord Stream 1 and Russia keeps threatening to concur. Okay, Bert. I think he misses being on screen. Let's get Bert back to end the show. That'll make everybody sleep really well tonight, won't it? Yeah. If you want to sleep well, just don't look up Bert the Turtle. You don't need to see these. Or should I show you guys the New York Public Service announcement? That stuff, that's another creepy one. Oh my, oh my, oh my. Duck and cover. Thank you, Bert. Thank you, Bert. Duck and cover. Alright, so apparently I've got my new co-host, Bert, here to cheer us on through the bear market. Duck and cover. Okay, Bert, we get it. Bye, Bert. And yeah, market psychology. If we don't have to all duck and cover, we can easily expect that we're going to go sideways for probably, if this took us a year so far, yeah, it's going to be a couple years, likely, but not necessarily in everything. That's where projects like startups that are still kicking off, that have really good community support and small liquidity pools, are what I'm aiming at in this market. So yeah, Hex is still ideal with HITs coming and the launch of Pulse Chain. Still happy about all of the protocols I got into that provide chargeable utility. And so I'm pretty happy. There are a lot of other protocols that are coming, but I mean, unless it actually provides something needed, because it's not just something people want to play with, like, oh, that's nice, that's a toy people might want to play. I don't know how many people want to play in the middle of a worldwide recession or depression. Really, is it playtime then, when everyone's panic, anger, and depression? Not sure if toys are going to cut it. This is, you might see some little pump actions, but this is where people have the time to sit and smart and build and pay attention to the community leaders that are building and looking forward to the next rush and preparing for the future instead of chasing what's already happened. So that's my general thoughts on the market and the world as it goes right now. A little bit of philosophy, a little bit of everything, a huge long rant. I hope everyone has enjoyed that. Thanks for sticking to end. Remember to unsubscribe and unfollow. I don't want you here. This is basic cable. You make me nervous. Stop looking at me. Go away. Go. Goodbye. Stay frosty.